Are you looking for a simple trading strategy on which you can rely to make huge gains in 2023? If so, I have something very special for you today. The trading strategy I'm about to present to you works well on the crypto and forex markets, and it can be used on lower time frames, making it suitable for day traders and scalpers. As an example, I'll use the price of Bitcoin on a 1-minute time frame. The setup contains 3 free TradingView indicators, which I'll explain in depth as we install them on the chart. So, to add the first one, go to the Indicators tab and search for 10 in 1 distinct moving averages, then pick this indicator made by Himanshu, then go to the indicator settings and enable the second MA in the input section. Change the type from SMA to EMA and the length from 1 to 50, then go to the Style section and change the colors for MA. When you're done, the chart should appear like this. The chart's exponential moving averages will decide the long-term trend direction. If the price breaks above the EMAs and the 50 EMA crosses the 200 EMA to the upside, the uptrend is confirmed. Only long positions can be made during the uptrend. When the price breaks below the moving averages and the 50 EMA passes the 200 EMA to the downside, the downtrend is verified. Only short positions should be taken at this time. Okay, now that we've learned how to spot market trends, let's apply the next indicator to the chart by clicking on the Indicators menu and typing Pivot Point Supertrend in the Search tab. The one you're looking for is this one, made by Lonesome the Blue. Leave the tool settings alone. We'll use the Pivot Point Supertrend as the first confirmation indicator in our strategy. We will place orders based on these buy and sell signals if the rest of the conditions are met. For example, as previously stated, a buy signal is only valid when the market is in an uptrend. The opposite is true for short entries. This way the signals provided by the supertrend dramatically increase in quality. However, such a strategy would be incomplete without the third piece, which is a volume indicator. There are dozens of volume indicators available, but Heatmap Volume by XD is highly recommended for this strategy. When adjusting the settings, make sure to change the extra high volume threshold to 3, the high volume threshold to 1.5, and the medium threshold to 0.2. This indicator colors the volume bars and candles based on the volume traded. Extra high volume is colored in red high, medium volume is colored in orange, and yellow low volume bars have light blue and blue colors. Volume is important because it shows how active market participants are during a specific time period. In my opinion, the most advantageous time to trade is when the volume level is medium and high. As you can see, when the volume on the market is low, the price usually moves sideways because market participants are unsure whether the price will rise or fall, and if you decide to enter the market at this time, there is a high chance that your position will result in a loss. The same is true when the volume on the market is extremely high, because spikes in volume usually create market imbalances, which results in chaotic price action. You should also avoid trading during this period. Based on what we've learned thus far, let's now grasp the exact rules for taking long and short trades. Make sure the following conditions are fulfilled for a buy signal. First, the price is closed higher than the moving averages. Second, the 50 EMA is above the 200 EMA. Third, the Pivot Point Supertrend gives a new buy signal. Fourth, the volume bar should be colored orange or yellow at the time the signal is issued. And finally, if the conditions are met, place a buy order at the close of the trigger candlestick. For take profit, the stop loss will be placed slightly below the 50 EMA, which is the yellow line. Target at least 2 times the risk, with the stop loss set to the break-even point as soon as the market hits 1-to-1 risk reward. For short trades, do the opposite. First, wait for the supertrend to issue a new sell signal. Second, the price must be closed below the EMAs at the time the label is printed. Third, the 50 EMA must be below the 200 EMA. And finally, the volume bar should be colored either orange or yellow. When the requirements for a short entry are met, place a sell order at the close of the price bar. Set the stop loss above the 50 EMA, and do the same for take profit as you would for long trades. You can even exit a trade as soon as the price hits the 50 EMA, but keep in mind that you can only exit a profitable position. For the past week, I tried this strategy on the price of Bitcoin on the 1-minute time frame, and it produced 20 wins and only 3 losses. So, if you had risked 5% of your account on each transaction with a risk-reward ratio of 1:2, you would have made a lot of money in less than a week. We also tried this strategy on the price of Ethereum, and it produced 10 valid trade entries in a short period of time, 8 of which were winners. You can use this strategy in various markets as well. It works well for 1 minute, 5 minutes, and 15 minutes time frames, but make sure to backtest and foretest it on a demo account first. As an added bonus, I'll teach you how to set up trade alerts for these buy and sell signals. First, click the alert icon at the top, then select the Pivot Point Supertrend indicator. You can create alerts for buy, sell, or both. Make sure to set the alert once per bar close. If you want to see one of my other trading strategies I use when day trading, check this video right here, because this strategy works great on the every time frame you want. I'll see you guys next time.